Welcome to Risky Ryan Trades. Today we're going to be going over all the stocks that I think are going to be the best picks for this month, specifically this week. So if you want to make a ton of money and be big baller status like the Ibarxa boss right here, his name is Benson, by the way, that's my dog, you're going to want to stick around for this video. So let's just dive right into it. The first stock I want to talk about is Zeta. I don't want to rehash everything I went over in my last earnings video, but they beat on earnings. They're growing 35% revenue. They're in a big stock repurchase program. Everything, all the fundamentals are trending in the right way. But this morning, I actually said to myself, like, I really don't understand what this company does, like, if I'm being honest. And so I asked ChatGPT, and if you're not using AI to learn, you should, because it's a great tool. So I just asked it, well, I want to understand Zeta Global's business a little bit better. And I have it trained. So that it's direct and it explains things simply. Like, you can actually program ChatGPT. I don't know if you knew that. Zeta Global is essentially an AI-powered marketing cloud company. And I'm thinking, okay, what's that? They specialize in helping businesses use data and machine learning, whoosh, I don't know what that is, to personalize customer outreach and improve marketing results. Okay, improve marketing results. That I can understand. They've been growing, blah, blah, blah. And so I kind of asked it more and more. And then, one of the questions I asked, what are their biggest clients? Their biggest clients are American Express, Ameriprise Financial, Bank of America. They don't disclose all of their clients, though, which is interesting. But they have over 1,100 clients. Eventually, I got to an understanding of it. And so I said to ChatGPT, so basically they help reduce advertising budget because they make advertising more efficient. Exactly. In simple terms, that's their core value proposition. They leverage AI to make marketing more targeted and efficient. Now, I work in automotive sales. I'm not the GM, but I understand that, like, the dealership advertising spend, it can be very difficult to ascertain how, the return on investment for advertising spend. So it can be frustrating. So if you can make it so that, advertising converts to more leads to actual buyers, then you can scale your company. And if you can do that for a company, then you can make them a lot of money and make yourself a lot of money along the way. And that's what Zeta has done. This is their CEO, David Steinberg. I just have him on here because I don't know if you've seen any of his interviews, but he just seems like a very likable person. So cool. Okay, let's look at the charts. This is Zeta. They popped on earnings. And there's still a buy, even though that they popped, whatever it was, like 8 to 20%, something like that. According to my GAN, if we come, and the way that I do this is, like, these GAN angles, I expect at a minimum for them to climb this. See, the reason why I say that is you'll see right here, it kind of reclaimed this GAN angle and has found its way above it. So there's nothing to say that this thing won't go vertical and just go straight up to $27 or reclaim the all-time highs and then climb this one. Totally could happen, but I don't have that expectation. I'm not trying to be, pie in the sky or whatever. Like, I just, I'm trying to be conservative here. So, but even with my conservative assessment on the technicals, I'm seeing a 22% CAGR if you bought today, 52 weeks out. And what's great about this is, despite the big run up that it just had, it's got a lot of room to run, and the fundamentals are still just separated from the technicals. There's going to be a big catch up, and I think that Zeta is going to be my next SoFi, where you look at the underlying business, you look at all the fundamentals, you just see all the momentum and all the metrics, and you say to yourself, why is the stock doing this? Why isn't it just doing this? And so that's how I feel about this one. Now, what's very interesting, take a look at the volume profile, anchored value profile. I'm going to go to a daily here real quick so you can kind of see. So, like, this was the gap up, and then it came down, and look at all the volume that's come on this Fibonacci level. I have a lot of reason to believe that this is like the low right here. And so I scaled up in my position. I've had my fill of Zeta. But if I, came into an extra $500 this week or something like that I wasn't expecting, at least half of that would go into Zeta, because I really do think that this is bottom of this little move. We're just going to start moving forward. If you get this gap fill, I mean, I'm just buying more. That'd be crazy. I don't think it'll happen, but it seems like multiple support levels with this Fibonacci and this anchored volume profile shelf. Okay, that's Zeta. Let's take a look at some other stocks that I think are going to be big winners. Let's do Oscar, or let's do Tesla. Let's please the Tesla people for a second here. So it is in the process of breaking out of this descending wedge. It tried to this week, but it wicked through and it rejected. So I would not be buying this until you get a bit more of a confirmation. I think this is going to be a tough one, though, because even if it breaks out of this descending wedge, this downtrend line, it's got very nearby resistance at 347, psychological resistance to 350. My guess, if I had to guess, say it breaks out, the way I would expect it to go is to pop up, tap that, come back down, retest the wedge, then kind of float. That's your buy signal. That's how I would play it. Now, if you just get a blast through and you see 360, if you see 360, then like, okay, 350 is pretty much support. So that's kind of how I would play this. But yeah, I mean, this thing has been tightening. It's ready to make a decision which way it wants to go. To be honest, like, I don't know why it would move up. I don't know why. The fundamentals are just not good at this company, but like, it's all like just hype and expectation. But like, hey, I got my shares because, so I think I tweeted this week, like, LOL stonk go up is like a good enough thesis sometimes. And that's Tesla, is just stonk go up. Oscar. Let's take a look at Oscar. Oscar's a big deal. I want to get big picture with this. 1 second. Excuse me. Sorry. All right. Hopefully I remember to cut that out. Okay. Big cup, no handle, but bull flag, downward channel, breaking out a downward channel. Big volume shelf, biggest volume shelf. Like, look, dude. That's crazy. Like, think about it. There's more interest in it right now than there was down here. So theoretically, there's more support level right here. There's just more people buying and selling. If the market makers need liquidity, they're going to gravitate to this area, and you're in the lower portion of this area. So the margin of safety on a technical level, to me, is pretty dang good. I don't have a GAN drawn on here. Hang on. Let me see if I do have a GAN. There we go. Okay, here, let's reduce the GAN just so you can see this so this bull flag. That's how I see this, as a bull flag. It tried to break out. It just can't do it. But lately it's just been trying so hard, like staying in the upper portion of the channel, breaking through, constantly breaking through. Something is holding it down. I don't know what it is, but something is holding it down. And you can see all this volume right here. Basically, this thing is a coiled spring, the way I kind of see this. And honestly, like, if you just wanted to straight trade this, like, you could set like 2 levels of stop loss, like one below all these wicks down here, and then one below this wick right here. And, those would be your stop losses. But yeah, this thing, Oscar, it responded well to earnings. The first day it didn't, but then it kind of recovered, and now we're up higher. So yeah, I mean, this thing could really should take off. So if you're trying to build a position, I think that you're running out of time, is the way I would put it. And if we take a look at the GAN, it once again closed above this GAN angle. So now what's crazy about this GAN angle here, let's just take a look here. 52 weeks out. It's a double up in 52 weeks if it can hold this GAN angle. That's pretty impressive. Do I think it's going to be on this gain angle? I don't. Really don't. Because look at that. That's like 5 years to get 50%. I just don't think it's going to go down that way. So yeah, Oscar looks really good. If you don't have enough Oscar, it's time to get your Oscar. What else we got? Crowdstrike. So software in general sold off last week. I think it was sometimes it seems to me that the market leaders affect the little guys. So like Microsoft software, Microsoft ran up, then they sold it off, and all of software is selling off, and no one can tell me why. No one can tell me why. Like why is Crowdstrike going down so much right now? It's down 20%. I don't know. Do you know? Comment below if you know why Crowdstrike's going down. All I know is that if I take this 52 weeks out, I'm getting 40% of my money. I like that. I like that. And then, okay, what tells me that this is the bottom? Well, big volume shelf, 1.618 Fibonacci level on the linear scale. So probably very good chance of being the bottom. Could it go down more? Sure, it could, but with a 40% return and a good chance of this being the bottom, if you like Crowdstrike, this is where you would buy some. Could it come down to this Fibonacci level at 408? Sure, it could. And what would that be 52 weeks out? That would be 45%. So you get 5% more return. You know, why risk it? Why not just buy right now? So I would wait. You know, I bought some shares right here. If it goes to that, I probably won't even buy more. I'll probably wait for it to come down all the way to the GAN if it were to do that, because then you're talking 57%. That's a lot of money. That's a lot of money. So yeah, I got my eye on Crowdstrike. To me, this seems like a good opportunity, especially since the market seems a little, dare I say, frothy or just kind of overdue for a pullback. It's just been so remarkably strong that I have a feeling that September, October, we're going to be at levels lower than this on a lot of the indexes and stocks. But Crowdstrike, I don't think so. I think September, October rolls around and Crowdstrike will be recovering while other stocks are dumping. Shark Ninja. You son of a bitch, Shark Ninja. You got me. So I was very successful with the Zeta earnings. Made a lot of money with that. Happy about that. Shark Ninja responded really well to earnings initially. It got out of the GAN arc, pretty sizably out of the GAN arc. I did a quick drawing. I was like, okay, well, what kind of CAGR are we looking at? 23%. And that's like borderline. Like, if it's only 15% or 18%, you might as well just buy the NASDAQ. To buy an individual stock, I want to get outsized returns versus the index. And so I saw, even though it had popped up so much, it still would give me a 23%. And, you know, here I am looking at like this 150. It's like, I mean, if this thing went on a run, I might not be able to buy more Shark Ninja shares. So I said, you know, damn it, like, okay, I'm going to buy some shares here because I might get priced out, you know? And then, like fucking whack-a-mole, I got, you know, this thing got slammed back into the GAN arc. And the GAN arc is like jail because it can just bounce around inside here and consolidate, you know, do like a bull flag or something. That's pretty common for this. So not too happy with that. But at the same time, okay, that just means I can continue to buy Shark Ninja. I'm comfortable bringing Shark Ninja up to like a higher percentage in my portfolio. I'm perfectly comfortable with that. So right now, it looks like it is, you know, next week it might challenge this 112 level. But I see 105 as probably being ultimate support. We'll see how this goes. if gun to my head, like I don't think it's going to be in this arc that long, but I would actually love to see this trade down all the way into the next earnings, because it would be for no reason at all. The last earnings were great. So if this thing wants to trade down irrationally, I will size my position up irrationally to irrational levels. So I'm happy to do it. Okay, speaking of these Gann arcs, I want to show you something here. Dogecoin. Dogecoin's been like, it never really spent a lot of time in Gann arc jail, but it did get outside of the Gann arc, and it's found support and it's tried to break out, tried to break away, like create separation from the Gann arc. Because once that happens, like it is right now, it's usually what happens is a pretty outsized move to the next symmetrical area of the Gann, and the next symmetrical area of the Gann for Dogecoin right now is $1.15. And so typically when Ethereum, because Ethereum's been just absolutely crushing it, typically what happens is after a couple of weeks, people start to rotate out. There's this whole like musical chairs that happens with crypto, but Dogecoin, I would expect in a week or two, maybe much sooner, to start doing a move back up to this level, probably back up to like 40 cents, something like that. But once it's out, like it's out, and it's going to try to get to this $1.15. I actually think it's going to go a lot higher than that. I actually think it's going to go to like probably like $1.50 to like $2. I think that's actually pretty reasonable. Now, am I betting the house on Dogecoin? No, because if I lose thousands of dollars in Dogecoin, I only have myself to blame for being that stupid. There's other much better risk rewards like Chainlink. Chainlink is like, I just like Chainlink a lot more than Dogecoin, but that's neither here nor there. I want to talk about Toast. Toast has been kind of really like giving me mixed signals. So it managed to get up and over, and then it just got rejected right back to Gann arc jail. And so whether this thing is going to ride this Gann angle or this Gann angle remains to be seen. Right now it's looking like it's going to be riding this Gann angle, and if I do like a 52-week out, it's only given me 13%. Might as well buy the NASDAQ. So I'm holding and I'm not selling. And the reason for that is this very well could be the bottom near term. Look at all this. Look at this volume shelf. I mean, that's just really incredible. Actually, here I want to see if, I want to see if I drag this out. Does it? Yeah. Okay. So there's a larger Gann shelf at the Gann here, but either way, it's a fintech. It's a fintech, and if there are going to be 4 rate cuts, like JP Morgan said that there might be, I could totally see it coming up and reclaiming this Gann angle and just like absolutely going nuclear. So I'm holding my position and not going to add until it gives me a little bit more signal. Because if it turns around and it just goes vertical, my position is large enough where I'll be happy. And if it kind of just bleeds out and it, whatever, it's kind of dead money. Well, the more weeks that goes by, the closer it gets to this Gann angle, the more I'll feel comfortable kind of DCAing into it. So Toast is something that I want to get involved in, but like every time I go to get involved in it, it's like I get into these consolidation areas or whatever. So is what it is. Okay, now let's say that you're like me and you were thinking, well, the market needs to pull back here shortly. What if we get defensive? What are some defensive names? Now, I was looking at AbbVie, and that turned out pretty well for me. I think this is going to the top of the Gann arc. It's probably going to 213 in a very short period of time, probably like, even if it takes, 12 weeks, it's not going to take 12 weeks. It's probably going to be like 4 to 8. Once it gets to 8. So that's like an 8% move, 1% a week. We're not blowing the doors off, but it's a defensive, play, and it'll just kind of, it's better than cash, the way I would put it, better than cash. But some other ones that I'm looking at, J&J breaking out of its years long downward channel. So that's why I'm kind of bullish on Oscar, because it does look like healthcare might finally be catching a bid. So Johnson and Johnson, when I did my back tests, Johnson & Johnson, one of the best healthcare stocks to own, to have in a portfolio. It's just, it stabilizes the portfolio. It's pretty decent growth, good dividend. Like it's just like it's a pretty good stock. One other one that I have is kind of like a hometown favorite. It's We Energies. It's our utility. When I pay my electric bill, this is who I pay. It's been consolidating since 2021. It found, support on this GAN. It hit the top of this GAN arc, so it's not quite out of the GAN arc yet, but it did make an all-time high. It did make an all-time high, so it is gathering strength. And so, breaking out of this, if you're going purely off of like my GAN and technicals, it might be a tough buy because you're gonna, as soon as you get out of this, you don't know if it's going to be a true breakout, and if it is, then it'll bump its head at 115. So really, you'd want to see a weekly candle close above 115. But then once you're able to do that, that's like a quick 7% up to there. So We Energies is one of those that I've also kind of looked at like as a defensive position, but I don't know, with the way that Ethereum is pumping and crypto's pumping, maybe I should hold off on my bearish feelings for a little while. Same with Palantir, it just doesn't make any sense. It never did make any sense. I don't know why I tried to make it make sense. I said, oh, it'll go back here. It didn't. Anyways, that's about all I have in my system. So hopefully you enjoyed that. Hopefully you learned something. Hopefully it gave you some good ideas. If it did, why don't you hit the video with the like button, hit the subscribe button if you'd like to see more videos like this. And is there a stock that you have your eyes on that you want people to pay attention to next week? What did I miss? So go ahead and leave that comment below. And until next time, Risky Brian out.